Alrighty, good morning, everybody. Welcome to the Hurley Investments Trade Findings and Adjustments of November 9th, 2023. As usual, I have up here some of the stuff we talked about last time. Talked about what we need to do when trade immediately goes the wrong way. Went over meta a lot, suggested a meta bull call. Let's see, that was November 2nd. So put a trade on November 1st and popped up and came down. One of those days, like, what the heck? And one of those days we got to remind ourselves that, this trend that we're starting here, it's not always completely up days. There's some flat days. It kind of jumps up between the days. There's a big up day that turns into a negative day. Another couple days that struggle to get over that 50-day moving average. But we know the facts of what's going on with Meta. We know they did amazing on their earnings, surprised people, and that one should be looking really nice for you guys if you had done the bull call that I had suggested. I think that's all I wanted to go on with that. I think you guys got that down pretty good. If you need to go back to my Hurley investment back on November 2nd, that's where I talk more about this. $310, $330 bull call is looking excellent right now. I'd be looking to maybe take a profit on that as we hit 325-ish, just because we've got this double top here. We're almost there. Maybe another day and we'll hit that. I wouldn't expect it to longer term stop there, but you might have a pullback short term and might be a good spot to be getting out of a short term trade. So what do I want to talk about today? I need your guys' help deciding on the next trade. Just look at a couple of stocks that we have that are bouncing. Got a triple top here on Boeing. Nice big rally from 180. But we've got this death cross 50 crossing below the 200 day. And it's just kind of fighting to get above that 50 day and start turning things around. Not a terrible earnings. They're still kind of turning things around fundamentally and business wise. Can't say I love the CEO, but I don't think this is one I'm looking at doing a short term trade with. Would have been nice to get a 180 and ride that up to 196, but wasn't on my radar. We've got Apple that has been in a nice run. Everybody was talking about how their phone sales weren't going to be good. They're going to struggle. And then Apple, as it does a lot of the time, proved a lot of people wrong. I kind of want to see if it gets back up to 196 from 183 today. Obviously, it's really more from 166. To see Apple have a bit of a recovery. No, they no longer tell you specific earnings on different products, but I think we can gather Apple did great. Disney, my other one. Disney, for hell's sake, should be getting back all the way to 200. But look at this. Big, huge jump, great earnings, big surprises. Like a double top here almost to that 200 day. Hasn't even touched overbought in forever. So obviously that's a bullish looking sign. But what did Disney do? Well, everybody said their parks are bleeding cash. You guys heard me talk about this at length, and Kevin talk about it. They're, oh my gosh, they are losing subscribers, which we know was not true. All went back to their uh, streaming platform in India that they chose not to take up a cricket deal because it was going to cost too much. And so naturally, some people out in India didn't subscribe, and that made some numbers look crappy for a little while. But it really wasn't that they were losing subscribers crazy amounts on everywhere. So they beat their subs expectations by 2 million and 150.2, I think. $148 expected. You guys remember I told you I just don't buy that their parks are bleeding cash. I went to Disneyland, took my family back in September. I just didn't see that. Just a fake news narrative. And just so happens, I'll say one of their biggest earning, or at least the segment that brought in the most money, was the parks. Gosh, I hate Microsoft Word. I like what I'm seeing in both of these. But what do you guys think? Yes, Lee, I'm getting a bit of a cold thanks to my little daughter. Hoping no one would notice. Based on what I've told you guys, which one would you choose for a trade? Here's Disney again. We have some resistance up here. We are coming to overbought, which I don't love. But a big jump above a triple top and this 85 that just was a pain in the butt for the last 4 months. Held it as a support, and then the rest of these last couple months just could not seem to justify, or at least investors couldn't seem to justify buying over 85. We added 100 shares for everybody down here somewhere. I like that. Here's Disney. I'll go back to Apple. What do you guys think? Apple, next maybe resistance level might be this 189, 190. Past that up at 195, 196. Both of these are going to have some good fortune from Christmas rally that we're experiencing. Here's our stock market. Nice push above the 50-day. Waiting for your guys' answers. Which one would you choose and why? Come on, guys. Throw out a guess. There's really no right answer, but I just want to hear some. I want to hear what you think and what you would choose and why. Apple hasn't gotten to overbought in 3 months, but look how long it was overbought here this summer when it topped out to 195-ish. So there's some excuse maybe that even though we're close to that overbought on the RSI, teeters there for quite a while as it runs up. Lee asked, do you think Apple is working on a turnaround or working on a turn down? Well, you tell me, Lee, what does it look like to you? Up day, up day, up day, up day. Struggled to get over the 50-day, up day, up day, up day, up day, up day. Like we talked about last week, there's no reason why, even if we have a couple pullback days, why it can't keep going. You look at this big trend here, several days goes up, and then we have a pair back that helps investors justify putting in more. Up, down, up, down, up, down, higher highs and higher lows. So, yeah, I think we might be able to see a little bit of a pullback, but a turn down, we haven't seen that yet. Go back to Disney. Not a lot in the recent past that tells us Disney should be able to justify staying up there overbought, but their earnings were so good. This could signal the turnaround for them. We said, I think you're referring to Apple, the rate of rise is slowing. I like it more than Disney, but may at least slow for a while. Oh, I mean, maybe, but you see this stuff all the time. It looks like it's kind of just small gains and then boom, hits up, kind of pulls back, boom. So again, it's not that it's turning around. Maybe you could say the rate of rise is slowing, but that doesn't mean much. Look how fast it comes up here and just kind of inches up, inches up. I mean, this is a huge run. But yeah, maybe we'll see a little bit of a pair back to launch, continue to the launch. You like it more than Disney, Lee. So why do you like it more than Disney? Jim said Disney announced cost cutting was a driver. Disney would be my choice if they continue to execute. Yeah, they've been cost cutting for a while, over 7 billion Now they've cut costs on with an extra, which includes the 2 million this quarter. But I would think the main driver was how well they did on their parks and their beating on their subscription numbers. So if I was to do this today, give me a little bit more. Dave said, I like excuse me, Dave. Dave said, I like Apple more, as Disney looks like it might run into some upside resistance. Yeah, I mean, and this is a huge run. We might have a paring back, a pullback a little bit as it hits some of these sell orders at these moving averages, at these resistance levels. Maybe a little bit of a pare back as it comes off of overbought. I'll tell you though, earnings wise, I'm much more impressed with Disney, but technical wise, Apple maybe looks like a safer bet. Is that kind of the is that the synopsis I'm getting from everybody? Not saying Disney made more than Apple, I'm just saying more of a surprise on Disney. So maybe what I would say is maybe we keep an eye for an out for a pullback to launch higher for both stocks. Maybe we look at a bull call spread now, where if we get a pullback, we can take the short call off and let the long call run. And I think you could justify that with both of them. Something like a 185 long against a 195. bull call. Does everybody understand what I'm talking about if I say these? 185 would be the long call, 195 would be the short call. Out to January. Expiration monthly. If I was to look at a Disney bull call, probably go closer just because how close we are to some resistance. Maybe 190, 195, maybe even a 200, or no, 200. Why am I saying 190? 90, 95. So I guess my thought is you could either wait to see a couple days how these ones pan out. Great earnings for both of them. Big jumps, really nice run in both of them. Question is it going to continue? Are we going to get a bit of a pullback before people start to jump into it more? So again, you could wait a couple days and see if it does that, which I would recommend. Or this possibility of doing bull calls for Disney, be a little closer spread. It gives you the opportunity if it really doesn't want to go the way that you're hoping. You have that short option hedging the long, and you can see where it comes down to. But man, it's so far below where I would think Disney could justify going up to. So, a couple options for you guys. I'll say and or, because not like you got to do this right today. Hope I made some of you guys some money on this one. Be looking at getting out of that now with a profit, or waiting to see if it gets up to that 325 in the next. Goodness, it's got to do it in the next day or two, right? All right, guys. Any other questions or thoughts or anything else you want me to look at? Thanks for all of your comments. I will be listening in for Kevin's webinar Monday. Hope you guys will join me. And I think that's all I've got for you. Thanks for joining. Thanks for the comments. Take it easy. Thanks, Jim. We'll talk to you guys later.